Welcome, everyone. My guest today is HousingWire CEO Clayton Collins to talk about the state of mortgage lending after we both have spent the last week at some pretty big industry events and ahead of our own mortgage banking summit. First, I want to thank our sponsor, Trust and Will, for making this episode possible. Clayton, welcome back to the podcast.
Well, thanks for having me, Sarah. Actually, thanks for letting me barge into the studio. And the studio is 14 feet from my office. Sometimes I'm going to join you on these shows, but thanks for letting me in.
No, absolutely. You and I kind of hit the road this week and got to go to some really interesting and exciting different events that lenders had. So we started out the week in Detroit at the Rocket TPO Pro event, Pro Experience, I think it was called. Really interesting, and especially to you and I who have longtime observers of this and seeing how they've grown their wholesale channel and their whole approach. And so I think that's really interesting. So I'd love to ask you, what stood out to you about that conference?
And the biggest thing that stood out was the stage they set from the very beginning. So at the welcome reception, they have Barry Sanders come and speak and talk about excellence. And I think that theme of excellence resonated throughout our 24-hour time in Detroit. The excellent high producing mortgage brokers who joined, the excellent executives who shared pretty impressive insights and strategies. It was just a theme of excellence, and that shined through.
I really like that. I think what stood out to me is it definitely was like, we're making this experience for the brokers and treating them in a way that maybe is, taking a playbook from one of their rivals there. It reminded me of what we used to see maybe and still do see with UWM or AIM Fuse, where it's really like, we're focused on you. You are who we're trying to serve, and really making that feel like a community. And I don't know that Rocket's always done that with their brokers.
Yeah, I'd say that. Extends across a few events and conversations we've had this week. I feel like over the last few years, particularly in this harder interest rate environment where volume is down, and even the years that preceded that during COVID, we got casual. Right. We showed up at conferences in t-shirts. We didn't exactly present ourselves as the financial professionals that we are. And so when I talk about excellence, I think that there's been an overarching theme this week of mortgage professionals showing up as professionals. The events we went to, people had stepped up the attire a little bit. The language, the messaging was stepped up. The focus on building excellence as professionals, whether that's technology or process or mindset and motivation, stepped up. The way we serve consumers stepped up. We saw it at Rocket. And you haven't talked about the event we were at yesterday. We also saw that yesterday at NEXA. And there's a theme here as we approach this next leg of the housing cycle. A housing cycle that we've talked about is one with a theme of consolidation, and there may be fewer loan originators and fewer real estate agents in the industry, but the ones that are here have survived the toughest stage of the market. They are the pros that are in this industry, cycle in, cycle out. They are the professionals. They're not the passerbys. And I feel like that kind of cultural institution of being a pro is starting to shine through, and you're just really seeing people show up differently than they did in the last 5 years. That's how I feel about this cultural theme I'm seeing at the moment.
I think that's actually a really good point. And I think about some of the people that we met, that they were not the speakers on the stage. And yet these are people who, they've been doing this for 20 years. They've been through all the cycles already. They're committed to this. And maybe now, brokers are just getting more of their due as far as it's not just about retail. I really thought Rocket's very specific focus on this was interesting. I really loved the marketing part. So they brought on their new CMO at Rocket. His name is Jonathan Mildenhall. And I was so inspired by him because, he comes from Airbnb. He has an incredible background in marketing. And I think that, he was friends with Varun.
Yep.
And Varun asked him, hey, I want you to come do this. And his first thing was listen, I believe in the company Rocket, but Rocket Mortgage, but I don't know that I believe in the branding. And it was a really interesting conversation they had.
He was like just a perfect presenter, perfect pro. Energy was so high,
Yeah.
but he wasn't afraid to come in with a little like 1-2 punch
Yeah.
at his own organization on like the approach that
Right.
they've taken in the past. Like there was a commentary in his talk on stage. It was Katie Sweeney who was interviewing him, right? Where he had said, there's not going to be any B-list celebrities in our Super Bowl commercials this year. So there was a we're not here to entertain. Rocket commercials in the past may have garnered some humor and a chuckle as you watched. Now we're going to focus on heart and community in the serious product that a mortgage is, and that message, is certainly different than the Jason Momoa days.
Yeah, no, I thought that was what was so striking. They're using in all of their marketing, whether it's commercial or TV or print or whatever, like they're going to use homes that were listed on Redfin that actual people bought, and then actual LOs who sold those homes.
I forgot to even mention that. So 100% of their marketing is going to include real loan originators. So like you're in this room that's like pretty community focused, and they run these commercials, and it's got a dozen, like 18 loan originators, like walking, talking, sitting with borrowers, and they're real people in the room. So you see these little little groups of like people seeing their colleague on the screen, and they like hoot and holler, and like there's a little very positive like client experience in that. If you're a wholesale lender and your client is the broker, they're doing a great job at engaging the people who drive business for them.
Well, I also think like from a consumer standpoint, I mean, like we all see more than we want the, the ads for like the pharmaceuticals, right? And it's always like a real patient, and that just brings you in because you're like, oh, that's, they have this condition, and I don't know, it's kind of creepy, but at the same time,
at the bottom it says paid actor may or may not have actual condition. That's not the case of the where we're going.
No, it's not. But I think what their new CMO said was like, this is all about authenticity. And in the past, I feel like there was sort of this like almost internal like inside baseball with brokers, and now it's like we're being serious about what matters to the consumer and not worried about like this internecine war. How do you say that? Anyway, inside baseball war. So I thought that was great. I think that carried through. So we were at NEXA. I'm trying to think what it was called.
The new name, NEXA Fest is the event.
NEXA Fest, but now they transitioned from NEXA Mortgage to NEXA Lending. Huge announcement. And Mike Cordes had some work to do there to explain to the people sitting in the room that did not mean they were pivoting to retail.
Yeah, that was a very well executed yet like interesting rebrand to watch and like see how Mike handled it, because the move from mortgage to lending is not substantial, but if you don't explain it properly, it could lead to confusion. Like, wait, are they like wholesale going to retail? Are they like changing the whole model? But I believe the point that Mike drove home from stage is that they're fully committed to wholesale. They're doing a large percentage of their loans to their own warehouse line. They're going to keep doing that, but they're going to keep doing wholesale. The pivot from mortgage to lending is meant to be more of a cultural shift in the organization of stepping up the professionalization of the organization with a big emphasis on recruiting. So Mike talked a lot about where the industry came from and the wholesale industry, and like the AIM brokers are better days, where it was kind of it was a very confrontational relationship between brokers and retail LOs. Now, I think the broker channel recognizes that to grow the pie, like to truly have channel growth, you need to be able to recruit people from retail over to the wholesale side of the industry. And if you want to do that effectively, a 100% confrontational relationship is not the path to channel growth. And I think I'd argue that, when a player gets as large as NEXA has, I think Mike said they're at 3,300 brokers in the organization now, you have to start thinking about growing the pie, not just your slice of the pie. And this seems to be one of those moments and in the history of that organization where they're taking a shift away from battlefield mentality to grow the pie mentality, which is probably good for the people there, the clients, the organizational culture as a whole.
Well, and he's like the poster boy. He even said, he's like, listen, nobody was more of a pit bull than me for saying brokers are better and like sticking in their face and being super aggressive. And he was like, this is NEXA growing up, and this is me growing up. And I thought that was really interesting because, to your point earlier, like we're seeing this growth of like professionalism, and like if you want to, what got you here is not going to get you there. Yep. And that's the point he made, is that brokers are better, and the whole brawl mentality was very necessary at the time, and it brought people over who really like that. He's like, but all those people are now over. So if you want to get the next round of people, that's not the message that's going to get them, because it's a very adversarial message, and it really denigrates what they do. And so I thought it was a great way for him to go on stage and be like, listen, I'm doing this personally. He even was trying not to cuss, I believe, which apparently is a diffijerry for.
There's another speaker dropped a bomb from the stage, and their new is it Jerry, the chief strategy officer?
Yes,
is that her title?
I think so.
Cut it out from the audience and said, no more of that. It's a new moment. But I think it's unique. We don't usually have these conversations, Sarah, and just talk about like the culture of mortgage lending.
Right.
I think we're at a moment where the culture of mortgage lending, the people, how they act, how they carry themselves, how they interact with the consumer. Like we're at a moment where we're seeing positive change in the culture of mortgage lending. I think it's something we're talking about, and a pretty exciting moment for me.
I do too. And I also think, like you said, it's the growth. I mean, in both of these cases, it's growth. And it's like, okay, you're no longer the opposition party. You're the big show. So like you got to now maybe operate a different way. I think it was well received yesterday too. And the Rocket event was very well attended, and we got to talk to people who really felt supported. So it feels like these changes are positive. Okay. We have so much news. How many breaking news things did my newsroom send out on Wednesday? Was it? I think it was four,
not to the whole audience.
Right.
There's some real estate brokers, some lender stuff, but it like mercy, there's some important stuff that impacts the whole industry. One of the big ones is the announcement that came out of FICO and their new program to work directly with lenders, which I think initially had some confusion in the industry. Like, how is this going to impact everybody? I think there's still some uncertainty and some mixed messages from lenders about their reaction to this new program. But no matter if you think it's a smart idea or not a smart idea, or the way the program was meant to be designed, or what the trade organizations or lenders or Bill Pulte asked for, it's going to have an impact. And that's what I think is fascinating on this one. So Sarah, can you give us a quick hit on how what we've covered and how the program is supposed to work?
Yeah. So, the original was just like, hey, here's what it is. And then we got some quick reaction. Yeah. So there's now a way to basically, that our headline was, FICO's offering a way to bypass the credit bureaus, basically with a going straight to the consumer.
Yeah. So the credit bureaus are still important, right? Like they're still the provider of data, but we have this old world where credit's controlled by the credit bureaus and resellers. We have this new world that's a little bit more focused on direct source APIs. And we've seen that direct source API business expansion happen in verification of employment, verification of assets. As we move to a world where direct source is the preferred path, because technology in terms of LOS underwriting and now how AI improves processes, this makes complete sense. Yet what has had me just reading and talking to people is the response from the trade organizations. So I feel that NBA's message, that Bob shared, was kind of hey, let's see how this plays out. CHLA had a similar message that felt all right, I won't put words in their mouth. I mean, I'll share exactly what they said. So scroll into this in our HousingWire article here. Where's Brooksmith? So Bob Brooksmith said that it remains to be seen if this will result in materially lower cost. MBA will monitor the implementation of this new program while continuing to call for reforms that support a better credit reporting system that promotes more competition, efficiency, and lower costs for consumers, Brooksmith said in a statement. Our article who was the author on this, that Flavia wrote goes on to share a perspective from the CHLA. CLHA said it is concerned that in a head-to-head matchup, Fair Isaac might ultimately squeeze out VantageScore and the credit bureau model altogether. I am excited that we have speakers from both of these organizations on stage at the Mortgage Banking Summit next week, because I don't know if maybe they have more context than I have. But I don't know if I entirely agree with these statements, like particularly the CHLA one. And I'd love to talk to Scott and Taylor and like that team about this, because I think that in a world where you shift from the old world model of credit bureaus and resellers to a new world model of direct APIs, you actually open the box for alternative credit. And that VantageScore stands to be a winner in this move. And the crazy part of that is, who owns VantageScore? Equifax, Experian, and TransUnion. So like there's this unique situation here. And I don't know if everybody watched the stock prices on these organizations last week, but there was moments where Fair Isaac, FICO, was trading up close to 25%. I think it was in a range of 17 to 25. I don't know exactly where it closed on Thursday, the day after the announcement. The credit bureaus all traded down 3, 4, 5%, which I feel like represents like what this news is. Like this news is a win for FICO. It's a battle punch for the credit bureaus. It's not a death blow. And then there's like the rest of the vendor and technology ecosystem. So like the credit resellers, fortunately, not many of the credit resellers are just credit resellers. Like the players in our industry have a deeper product suites than that. So the credit reselling part of their business is not the entire business. So yeah, this might be like a little gut punch to a revenue line or a division inside of some of the businesses that sell that sell credit reports in the old world model. But now we get to see if they can pivot to the alternative credit, like and direct data feeds and other parts of the credit approval process. For me, this is a signal that we're crossing the chasm into a new world of more direct data, direct API, and a world with more competition, which arguably is a good thing. So CHLA makes the point that they're I'm going to use their words to be exact here. They're concerned that in a head-to-head matchup, Fair Isaac might ultimately squeeze out VantageScore and the credit bureau model altogether. I think, and I think this is the point that Bill Pulte made, is that competition is a good thing. And while ultimately it does not appear that this move by FICO by itself will substantially lower costs for all lenders, though it may lower costs substantially for some lenders, particularly lenders who do a lot more pre-approvals than they do closings, and their attach rate or their close rate's not as high. Overall, it might not be that impactful on pricing, and like the price per report didn't go down substantially when you look at the performance-based model. But that doesn't mean this is where we land in the long run. This is step one, and I really feel like we all try to read the tea leaves of Director Bill Pulte's Twitter X post. I feel like I'm Logan. I'm bouncing back and forth between X and Twitter, reading through Bill Pulte's tea leaves. But the tea leaves I read said, all right, thanks for making a move, but this wasn't the move we asked for in entirety. We'll see where we go.
I think this is so important because obviously the reason that FICO is in the position that is because of the government putting their thumb on the scale.
Yep.
For FICO for how many years now? It's not like, there's always been alternative scoring. There's always been these other options. Even within FICO itself, they could do it. So really in my opinion, it's a government created problem. And in some ways, as far as like what they require and then what they're, it's not like there's a government mandate there, but if Fannie and Freddie are only going to take one thing, that it's the same thing.
Yeah, I mean, I don't know. The government did give FICO air cover to make a pretty positive business decision for FICO's business model. So like that's another element of this. Like it's like if I'm the CEO of FICO, I'm not unhappy right now.
No, right, for sure.
So it's an interesting one. So we don't know how it's going to play out yet. It's going to impact different lenders differently as it stands today. But we're going to go deeper with lenders as well as some of the trade association and executives and lobbyists next week at the Mortgage Banking Summit here in Dallas. So I'm pumped for that one. The timing couldn't be more optimal.
Really, people should look at the dates of our summits and be like, okay, what is going to happen the week before? Because so far that's been the Housing Economic Summit, the AI Summit, this one. It's pretty crazy. I think this is really good timing. So I'm going to be the moderator on a panel with Pete Mills from MBA and Rob Zimmer from CHLA. And the topic is like, the latest on the GSEs, but really we've talked about is like what's happening in Washington that lenders need to know.
Yep.
And even though we've met and I'm formulating questions, we also said like, listen, we might be in the green room and going, no, we got to talk about this because things change fast.
Or 100% do that. I mean, I called Brenna last night, way too late to be calling Brenna normally with like 6 ideas of things that need to be on the agenda for next week. And we're not going to change the speakers, but we are going to change the question flow to hit the topics that are most important to our audience members, because no one's coming to these events to learn about last month's news. They're coming to learn about what's coming up the pipe.
Well, and luckily we are a news organization. This is what we can do. We can pivot. Yep. And the focus of this event is always when Brennan and I when we talk about how we're going to do this, it's always the focus on what is working, who is winning, what are the things people need to know to actually make their business better and go home and like make a real difference. And so we're doing that with, we just had the AI Summit, but definitely some of that AI and tech stuff's coming through.
Yep.
With maximizing profitability in AI. One thing I wanted to talk to you about was servicing. So we talked about the wholesale channel. The other thing that we see is just the importance of servicing right now.
Can we pause for a second on the other big breaking this week?
Oh.
Jay Bray named CEO of Rocket Mortgage. You want to talk about the importance of servicing. Rocket just buys Mr. Cooper. The deal is substantially larger than initially announced. And on close, Jay becomes CEO of the whole part of the mortgage organization, reporting to Varun as CEO of Rocket Companies. All right, Jay's got origination chops, but he's the smartest guy in the room on servicing. And if this doesn't signal something, then I don't know what does.
It's funny that you brought that up because it's been such a crazy week of news. I was like, oh yeah, that was just this week that was announced at that event.
I think it's still the feature article on our own page, but it's an important one. So we're doing the executive servicing roundtable here at the office the day before. I'm sure some of that conversation and knowledge will leak onto the stage at the Mortgage Banking Summit. It's a signal of where we're going and what people are interested in. I'm pumped for it.
Boy, I just think it just shows you and I've been I've been watching this industry. You've been watching this industry and bought this company. We've seen a lot of cycles. This is a really interesting one.
Yep. Yeah. So I know we're running tight on time here, Sarah. So there's one more thing I want to hit, and it's, this kind of ties in the event travel we had this week with what we're doing next week. And it's something that came up in a conversation with my friend Renee Rodriguez yesterday is proximity is power and proximity is powerful. That's a message that's in support of how we take our often digital relationships from email and Zoom to shaking hands. It's something that, obviously, I don't want this to sound self-serving, supports the reason we go to events. It's also the reason we go visit our clients and we go meet our colleagues and clients for lunch and coffee. The way people can relate to each other and talk to each other when they're face to face is entirely different than the way they relate to each other through social media, through a Zoom call, even on the phone. And I think that if I want to get up on my CEO soapbox for a second, I'm going to sing the praises of proximity. I'm feeling the power of proximity as we have more of our team members here at HWHQ. I'm feeling the power of proximity when I've been to 2 mortgage events this week. I have 2 more events next week. The relationships develop faster. The learning happens faster. The collaboration happens faster. And at HousingWire, if we're going to win, it's gonna be through proximity. And I think there's something to learn there for our audience, because I want to see our audience win. I want to see the folks who invest their time and energy to learning from our newsroom and their peers and our events. I want to see them win. And if I have a coaching message to our whole audience, is proximity is power.
I love that. That's a great thing to end on. I would just say it mirrors what our audience is finding, like what's valuable in their business is the relationship they have with their clients. And it's the relationship that's going to build everything from going on. And now, we're seeing it like even within the industry, it's the relationships that are going to make the difference. So love that. I'm going to be at our event and then going to NERMLA, the National Reverse Mortgage Lenders Association, next week. So we're living this out, and I couldn't agree with you more. Huge. So thank you for joining me. It's been so fun.
Cheers. Thanks for having me.